Stock prices have been doing really well in 2024, and chances are we're going to end this year in the green. We had a very good year in 2023, so back to back years is excellent. But what's going to happen in 2025? That's what this podcast episode is going to be all about. Is just beginning to think about what are areas that I should be researching and taking a look at, maybe some discounted stocks that are really going to work in 2025 and 2026. Now, the interest rates are falling. The Federal Reserve had their meeting on Wednesday, and they brought down interest rates by 50 basis points, or half a percentage point or percentage rate. And that has a big effect. It has a big effect on stocks. It also has a big effect on yields on bonds. So as I go through, I wanted to point out some areas that are going to be areas of research for me and potential stocks that I hope to find that are really going to rally. In addition to my comments, I wanted to share a few videos of investors that I really respect and trust and have been listening to for quite a while. I don't quite follow exactly what these investors do every single time, but I really like to listen to their thoughts and establish what's the sentiment, what's likely going to happen down the road. And there is some commonality as you hear across the different investors. You're going to kind of pick up a theme. At least I pick up a theme. I'm going to use that as a trend to expect in 2025. So let's take a look at a few videos and I'll let you know what areas I'm looking for some discounted stocks and maybe provide a few examples. Let me first take a look at what stocks have been working for the last 12 months and then start talking about the following 12 months. So no big surprise, over the last 12 months, technology has really led the uptrend. Technology, semiconductor, and a variety of different technology companies have done really, really well. Over the last year, technology as a whole sector has gone up 61%. That's really great. Communication services, that includes Meta, Google Alphabet, Netflix, it's up 41%. Did really well. Industrials have done quite well at 34%. Financials, 33%. Healthcare, 28%. So you can see that these industries really led. Every industry was in the green, but maybe there's some pent up upside in some of these industries. And that's one thing I'd like to take a look at is what is going to be cyclical and have a very good economic year in 2025. I think that's where there's going to be some fertile ground to look for good stocks to pick up or maybe add additional shares in. Over the last 2 business days, some respected investors have come out and shared their thoughts on the economy, interest rates, and where stocks are going. And the first big investor that I wanted to talk about is Steve Eisman, who really had a clear way of looking at what's going to affect stocks in the future. It's in the form of the economy. Let me share that video with you, and I'll come back and comment on what I'm hearing from this super investor.
You don't seem terribly jazzed by this 50 basis point cut. It doesn't really rock your world.
Let me tell you about my day, from a PM's perspective, about what actually happened. So, prior to Fed Day, I get 3,000 emails about what the Fed's going to do. And then the Fed does what it does, and I get emails of redlined. It's like every word that is changed is crossed out. Every new word is put in. It's like they treat this like Moses coming down with the tablets. The Ten Commandments still in the same order that they were in, and but it's an important communication function because the Fed knows they treat it like the Ten Commandments, so they take it seriously as well. But 25 basis points, 50 basis points. And every time the Fed does whatever it does, the market has absolutely no idea what to do the very first day. And then think about today. So the market's up a lot and rates are higher. Like, that shouldn't be. If everybody's so into like, what's the Fed going to do? Are rates going to go lower? So the stock market went up. Well, rates are up and the stock market's up. So I think it's worth a lot more. It's much more important about how's the economy doing. And if the economy is fine, you could buy stocks, and if the economy is going to go into recession, you can't. The rest is gobbledygook.
The economy certainly is going to be the biggest factor weighing on stocks for 2025. And the economy has been slowing down. It's not doing terribly. It's just slower than it was before. As long as unemployment doesn't begin to go up, because unemployment goes up fast, we should be okay from an economic perspective. But based on a slow economy, I think I need to pick stocks that are going to be doing okay. They don't need to have boom, boom years going on in order for their companies to thrive. Now let's take a look at another investor that I really like, and that's in Tom Lee, who has a very good vision of growth stocks. Let's hear what he has to say, and I'll come back and comment.
Cut. Our next guest likes industrials and financials here. Fundstrat Global Advisors Head of Research and CNBC contributor Tom Lee joins us on the phone. Sticking with his target of 5,200, Tom, I know you agree the cycle has started and there is a Fed put in place, but it doesn't sound like you're willing at this moment to add a lot more risk.
Good morning, Carl, and thanks for having me. You know, Carl, I've got, I think, two time frames. I think what Steve said about the recalibration is really important because I think investors also need to recalibrate. There are too many that were in the camp of a hard landing coming, or the Fed would be too late. And this Fed cut cycle, I think, is setting the stage for markets to be really strong over the next 1 month or next 3 months. But what the stocks do between now and, let's say, the election day, I think is still a lot of uncertainty, and that's the reason why I'm a little hesitant for investors to dive in. But if I was going to advise where to be positioned, Carl, it's exactly what you said. It's cyclicals, which is industrials, financials, and small caps.
Right, with a preference for that over your traditional Mag 7 tech AI build-out trade?
I think tech and Mag 7 still keeps up with the market. And that's why someone owns it and they have tax implications. I wouldn't sell it. But for all these folks that have been sitting on a defensive positions or thinking the Fed cut was going to be too late and the market was going to, equity markets were going to fall, I think those folks have to allocate into cyclical stocks, especially small caps, because they are not only sensitive to the cut in rates because of variable rate debt, but they're going to benefit from the cyclical boost to the economy as mortgages. The cost of mortgages drop, auto loans, credit cards, the lift to the consumer, potential M&A, all these are big tailwinds for small caps.
At the beginning of 2024, it was expected that stocks were going to fade a bit because we had such a good year in 2023. Tom Lee came out and said that stocks were really going to rally, and he was right, and he should receive a lot of credit for having that forward vision. And now he's citing that certain stocks are going to do well, the cyclicals. He pointed to industrials, financials, and small caps. I can't argue with that. I'm going to take that as an input as I try to narrow down where I should be looking for good stocks. But Tom Lee really does have a very, very good sense of where value is going and good comments that I'm going to consider for 2025. And the final super investor that I'll share a video on is from Jeffrey Gundlach. He's really good, very successful. He's a West Coast guy like myself. He has a very good sense, especially around fixed income as well as stocks. Let's listen in on what he had to say. And I'll come back and comment on what I'm picking up from his particular viewpoint.
I think that the bond market at the long end is in particular where the yields are up. And the long end of the bond market doesn't want the Fed to be easing aggressively because they're worried about inflation. The rates have come down a lot this year on the short end, not very much on the long end. And that the Fed easing strikes the long end of the market as being inflationary. And so they're building in a premium against that. I think the word of the day was recalibration. He said it a lot of times that, you know, they're recalibrating the rates. I think he seemed to relax to me. He even cracked a couple of jokes, which you don't see much from Mr. Powell. I think he felt good that he was now more in sync with the bond market.
Mr. Gundlach really commented that short-term rates on bonds are really coming down and long-term rates are going up or holding steady. So what that tells me is that investing in long-term bonds is a good idea, especially since I could lock in 5 or 6% yields on those long bonds. So that's an area that I am going to focus on going forward. So my game plan for 2025 is as follows. First, I'm going to buy into long-term bonds. I've been doing really well with short-term bonds over the last couple of years because rates have been really good on the short end. But now it's time to really lock in some long-term yields. And I'm expecting that interest rates are going to continue to drop. So that's going to be an area of investment. That one's easy because long-term bonds are easy to get into. I'll probably buy them through an ETF. Second, small caps. As we look at lower interest rates means that small caps should rally. The other reason why small caps are really interesting is that a lot of small caps are somewhat neglected or not very well understood. So if I could have the advantage of doing my homework on some companies, I think I could probably find a couple good stocks or expand the number of shares I have on my current small caps that I currently own and really just put more capital in them. So small caps will be another area of my plan for 2025. Industrials and materials companies, I think, are being sold rather low right now and are going to rise in 25, 26. The economy is not doing all that great. It's slowing down. And material companies and industrial companies are being sold off. Some of them for good reason. For example, FedEx sold off this past week because their revenues have really gone down. I'm going to stay away from stocks like that, but I think I could probably find some good industrials, some good material companies that are priced really well. And once we know that the economy is going to get out of this lull, I think those companies are really going to rally in 2025 and 2026. And last is communication services. I like communication services because no matter if we have a thriving economy or a slow economy, people need communication services or they just don't let them go. For example, they're going to keep using Facebook, they're going to keep using Threads or Instagram, and they're going to keep their Netflix subscription. So that's another area that I will continue to buy shares into since I already have some really good stocks in communication services. So let me provide a few examples of the investments that I'm looking at in my plan for 2025 in each category. So for long-term bonds, it's probably the easiest place to operate in because there's really good ETFs to get into long-term bonds. Whether I'm looking for a duration of 10 years or a 20-year, there's really good ETFs that are available. I'm probably going to buy a combination of 10-year and 20-year duration ETFs. I already started buying into the Vanguard long-term bond ETF. I've bought $2,000 of it this past week, and I'll continue to add on throughout the rest of 2024 to build a good position for long-term bonds. What I've seen with small caps is their fundamentals are actually better than the big large caps. There's a discount just if you look at fundamentals. So I'm going to go across many different industries to look at small caps that are really working. I already own a good number in healthcare. I've got one in oil and gas as examples. And I'm going to look to those to make sure those are good investments and put more capital into those small caps. For industrial material sector stocks, I'm going to look for some good quality companies. An example is looking for aerospace parts companies that is in industrial classification. Those companies will continue to sell their parts. Air travel is really, really high. And I think it's going to continue for the next couple of years. So picking out some good quality industrial and material companies is going to be key for my performance in 2025. And last, communication services. I've already got a couple of big companies within this sector, within Meta and Google Alphabet, and I'll continue to buy shares in these companies. They're just two companies that are just going to continue to weather a good or bad economy really well. And I would be in good shape if I continue to buy more shares in both of those. So that's my review of trying to think about what stocks are going to be good in 12 to 18 months. I encourage you to think along those lines. It's one thing to look at the rearview mirror for performance and see what's worked, but it's always important to look through the windshield and see what's coming up ahead. And it's just a good habit to continue to do that and see what's coming up ahead in the next couple of quarters. I hope you found the video interesting, and I appreciate you watching this podcast. Keep in mind, I'm an individual investor, just sharing my experience. Please don't take any of the comments I made as financial advice. I don't recommend you buy, hold, or sell any company I talked about. Thanks again for watching. Good luck investing.